Hello, good morning. You've tuned into Power Breakfast on CNBC TV18. I'm Vinny Motiwala and with me is Vamakshi Toria. Good morning, Vamakshi, and happy Friday to you.
Well, happy Friday to you, Vinny. It's been a volatile week so far, so, traders will be saying, thank God it's Friday. So on that note, let's get started with some of the top headlines. Donald Trump announced a 90-day pause on tariffs for all non-retaliating countries except China, for which the tariff rate jumps to 145%, taking into account the 20% levied weeks ago. China vows to fight to the end if a compromise cannot be reached.
U.S. stock futures lower following a weak session on the Wall Street, with all three indices giving almost half of their gains from Wednesday. The Dow Jones fell almost 2.5%, while S&P 500 and Nasdaq ended 3.4% and 4.3% lower. The U.S. dollar index suffers biggest drop since 2022.
Asian markets resume sell-off on US-China trade war worries. Japanese market plunges over 5%. The GIFT Nifty, however, is suggesting a 450-point higher start for the Indian market.
Oil prices slip in nearly 3% on fears of deepening US-China trade war and a possible recession. The EIA warns of a lower oil demand growth from tariffs. Gold prices hit a record high of $3,171 amid safe haven demand.
TCS kickstart the Q4 earnings season with a subdued performance. Company's net profit and revenue came in below street expectations, while revenue in US dollar terms declined by 1% on a sequential basis versus CNBC TV18's estimate of 0.8% decline. Company wins deals worth $12.2 billion during the quarter. Management says that FY26 should be better than FY25 despite short-term uncertainty.
Now, those were the top headlines this morning. But first, let's take a look at what the Asian market is doing and getting some cues from Asia front. Asian markets, as of now, what you're looking at, they are sliding in today's trading session. Those tensions between US and China are continuing in terms of trade. Now, Trump has imposed furthermore tariffs on Chinese products of around 145%. And there was a retaliatory tariff that was imposed by China as well. US President Donald Trump yesterday had announced a 90-day pause on higher tariffs on all nations except China. Now look at what we're seeing in terms of index. Taiwan index managing to hold on to some bit of a gain of 0.3% in today's trading session. Hang Seng, on the other hand, that's the China index, that's down almost 1%. When you're looking at Shanghai as well, that also seems to have opened up with some bit of a subduedness. ASX 200, Nikkei, that's the Japanese index, that is seeing the sharpest fall in today's trading session, down almost 4-5%. So keep an eye on that. Even the Korean index is not doing anything exciting. But GIFT Nifty, let's look at that and what the suggestion is coming in for the Indian markets as of now. Yesterday we were surely closed, so are we going to see that run up? Seems like we are expecting to open up on the green side. A gap up start is what we are watching out for as of now. I'm actually 470-point uptick today, despite that Asian market and the US market fall that we're seeing coming.
Well, absolutely, Vinny. We'll have to wait and see whether or not this manages to sustain. But let's stick with the Asian markets then. Even as Trump hiked tariffs on China, brokerage Goldman Sachs holds an overweight view on China. Let's listen in to Sunil Kaul of Goldman Sachs as he explains why.
Sharp increase in the tariffs and in the retaliation, the 145% number, that does have impact on the market. That does have impact on the growth as well. I mean, in fact, if you look at our numbers, we just recently cut China's GDP growth number by 50 basis points, both in calendar 2025 and 2026. So we are now looking at China's growth to slow down to from 4.5% to 4% this year, and from 4% to 3.5% this year. So clearly, I think these high tariff numbers are having are weighing on activity and growth. But at the margin, I think the policy is also going to be incrementally more supportive, and we do think that some of this impact from tariffs is going to be offset by policy stimulus.
And in the US market, Wall Street ended Thursday's trading session lower. Now, this was wiping out a chunk of Wednesday's historic rally that they saw there. Dow tumbled more than 1,000 points, while S&P 500 shed nearly 190 points. The tech-heavy Nasdaq, that also saw losses and cuts of 740 points at close. better than expected inflation data did not do anything to ease these fears on the street. The consumer price index that came in at 2.4% versus an estimate of 2.6%. Now, to get a roundup and more in terms of the fine print, we have CNBC's Rick Santelli, who's joining in with us.
These are March reads on the consumer price index, coming in under -0.1 on headline, -0.1. We're expecting the exact opposite. We were expecting up 0.1, -0.1. Well, we equal where we were in May of 2020 to find a lower number. You're all the way to April of 2020, the heavy COVID-affected months of the calendar. If we take food and energy out, still coming in on the under, up 0.1. We're expecting triple that number, up 0.1. Well, that would equal where we were in June of last year. To find a lower number would be 0 in January of 21. These are definitely low numbers. Now, let's look at year-over-year perspective, shall we? Up 2.4, we're expecting 2.6. 2.4 would equal where we were in SEPA 24. You have to go to Feb of 21 to find a lower number. Now let's go year over year. Ex food and energy, expecting 3, comes in light, 2.8. That follows 3.1. 2.8 would be lowest since March of 21. These are really low numbers. Now let's look at initial and continuing claims, shall we? On the initial claims, we're looking for a number that would be roughly in the 224 camp, comes in at 223, very close to expectations. And if we look at the continuing claims, last month they reached 1.903 million, and once again they revise it away. 1,893,000 is last month, and the new number 1,850,000. That really is a nice drop. And if we want to comp, the last time we were at that level, well, it would be the last week of January when we were under 1.84. So that would be your comp.
However, shifting the focus back on U.S. tariffs, U.S. President Donald Trump spoke to the media and indicated that trade deals will be finalized with several countries, including China, and praised the U.S. bond market. He also warned of doubling of tariffs if countries retaliated against the U.S. Let's listen in.
You know, look, nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. You know, it's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal. I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible. Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today. The big move was what I did on Liberation Day. I thought that people were jumping a little bit out of line. They were getting yippy, you know. They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. No other president. I know the presidents. They wouldn't have done it. And it had to be done. What was happening to us on trade, not only with, you know, if you look at it, not only with China, but China was by far the biggest abuser in history.
And U.S. Treasury Secretary Scott Bessent also reaffirmed that he saw nothing unusual with the markets. Listen in.
As we go through the queue and settle with these countries who are going to bring us their best offers, you know, we will end up in a place of great certainty over the next 90 days on tariffs. We had very good inflation numbers today. Oil's down. We had a successful bond market. So I don't see anything unusual.
Kevin Hassett, who is the director of the National Economic Council, also tells CNBC that the moves in the market were just coincidental to Trump's announcements of a tariff pause. Let's listen in.
It could well be that the announcement that came out yesterday was going to happen anyway because there were so many deals teed up. There was a discussion about whether a general pause or a few deals that are just about finalized are the way to move to the next step and to make it clear to markets that we're serious about the strategy that we're following. And I think in the end, everybody decided as a team, all the way from Peter Navarro to whoever else you think is on the other side, agreed to do it this way. And I think, the fact that the bond market was telling us, hey, it's probably time to move, certainly would have contributed at least a little bit to that thinking. But it wasn't the bond market that made a panic move because there was a very systematic, well-planned move that was just about to happen that just turned out to be at the same time.
Okay, on that note, we're going to slip into a very short break. But after the break, we'll be joined by our research team to tell you how the overnight cues will impact the Indian markets and set you up for trade. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now we have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as the cues in the world of F&O. Hormaz, let's start up first with you. Good morning, and what are we watching out for in terms of Indian markets? Asian markets have turned and flipped to the red side today. Indian markets, a different story seems like it.
Good morning, Vinny. It's a lot has happened over the last 2 days, so we need to be reacting to 2 days of global cues that have emerged. But for now, the GIFT Nifty is suggesting that the implied open indicates a 500-point gap up for now, that the benefits of that 90-day tariff pause would likely to be trickling in. But of course, you need to keep in mind that at one point yesterday, the GIFT Nifty was indicating an implied open of more than 1,000 points, so we need to factor that in as well. And of course, since then, since that 90-day pause announcement yesterday, Wall Street gave up more than a third of what it gained on Wednesday. There is still lack of clarity on multiple aspects with regards to these tariffs on various sectors, and Donald Trump has also gone on record to say that these higher tariffs will return if deals are not reached with most of these countries as well. Now, India was a relative outperformer on Wednesday by not falling as much, and it was because of the FMCG names. All of these consumption-related names did well on Wednesday, and that kept the losses in check for the Nifty. Of course, you need to keep an eye out for the Nifty IT today, particularly because of the rally seen on the Nasdaq on Wednesday and the sell-off seen last night as well. We'll also be reacting to results from TCS, so that will be having a bearing on the Nifty IT as well. Of course, the RBI draft of norms on the gold financing rules will keep all these gold financiers like Manappuram, Muthoot and IIFL in focus as well. Of course, keep an eye out on auto, pharma and metals because there is still no clarity with regards to what happens to the tariffs that are already imposed and are likely to be imposed on sectors like pharma. So keep an eye out on that. Of course, now that we are seeing a gap up, the 23,000 level on the upside comes into play, and on the downside, of course, yesterday's low, of course, that is Wednesday's low of 22,350 and Tuesday's low of 22,270 comes into play as well on the downside. But for now, a gap up is what's in the offing, so expect higher levels at the start of trade.
Okay, Hormaz, thank you so much for that. But let's take a look at which are the important stocks to watch out for in today's trading session. First up, we'll start with TCS. Q4 numbers reported modest miss in terms of revenue growth. We're seeing that the constant currency revenue growth was down by 0.8% on a quarter-on-quarter basis. Dollar revenue down by 0.1%. Margins also some bit of a disappointment. So yes, we could see some bit of a red there. Moving on, we also have Muthoot Finance and Manappuram. That will be in focus. Now, there was that update that came in terms from RBI in terms of gold loan collateral, where maximum LTV ratio for consumption of gold loans can't exceed 75% of gold value. LTV ceiling 75% shall apply to all gold loan sanctions by NBFCs. So yes, near term may be a bit of a negative, but then otherwise we're keeping an eye out on both these stocks. Two pharma stocks in focus. Biocon, now they've gotten a US FDA approval for the biosimilar, which is bevacizumab, which is a cancer drug treatment. They're expanding their portfolio furthermore on the US market. And overall, this biosimilar has a market size of around $2 billion that we had seen, and this was in 2023. Sun Pharma also in focus, a positive news flow coming in here. The US court has ruled in favor of Sun Pharma. This is an ongoing case that is going on for one of the drugs, which is for the treatment of alopecia, and because of this is an important drug for the company. So yes, now they can launch this drug. The due date of the launch, or when will they be launching this product, is something to watch out for, but surely a positive as of now, because this preliminary injunction that was there for Sun Pharma, that has been lifted. Coromandel International, keep an eye out on this one. They have signed an MOU with Saudi mining company to partner for phosphatic fertilizers. So on the back of that, we're keeping an eye on that. NBC has concluded some e-auction for residential units, and this is in Greater Noida. Good sales value for this one as well of around 1,500 crores. Bharti Hexacom put the sale of infrastructure business to Indus Tower on hold, so something to watch out for on that front as well. Anand Rathi has come out with some updates coming in here. Asset under management as at 77,103 crores. Guidance was of 80,000 crores, some bit on below the expectation over there. So keep an eye out on these stocks in today's trading session.
Well, thank you so much for that, Vinny. Quite a comprehensive list. But let's move on and let's go across to Mangalam. He's here to tell us how the F&O setup looks like. Good morning, Mangalam.
Good morning. Let's start with, thank God it's Friday. And why do I say that despite it being a holiday yesterday itself? Because if you look at the Dow, over the last 4 trading sessions, you have April 7th, where the Dow was down 1%. April 8th, the Dow was down 0.8%. And thereafter, April 9th, it was up 8%. And yesterday was down 2.5%. By the end of this week, you would be worried, what exactly is happening. And yesterday itself, Dow from the highs actually fell 403 points, and from the lows itself rallied about 1,166 points. So it's fair amount of volatility, so you could do with a break. The GIFT Nifty is indicating a positive start, so that's a good thing. The one sector that we'll be watching out for today, I'll be watching out for in particular, is Nifty IT because of counterbalancing factors. On the one hand, you have TCS results which may weigh it down, but on the other, you have the IT index which is lower, and there might be a relief rally that may come in on account of what's taken place globally overnight. The FIs, they're selling in cash market. More importantly, they continue to sell in index futures as well. So on Wednesday, they sold close to around 1,200 crores. With a lot of long positions being unwound. What this does is the FII long exposure, if you remember at the start of the series, was 40%. Sometime last week, it went to about 30%, and now it's down to 22%. So the FII long exposure has been structurally coming down this series so far. But if the market moves higher, there could be a case for these shorts to cover their position. So the FI long exposure now comes up for you on the screen at 22%. Shorts are 78%. If we move higher, then are these shorts going to cover their positions or not? The question is, with the GIFT Nifty indicating a 450-point uptick, what should you do? Should you chase that gap up? Perhaps not. Why do I say that? Because the 23,000 call writers are still fairly active. So if the market crosses that 100 mark, only then will you see the elements of short covering. And Street is positioned for that with the purchase of 23,500 and 24,000 calls. At the same time, where the market opens has resistance in the form of the 50 and the 20-day moving average. So keep an eye out on that. We'll just watch out for a couple of levels. On TCS, the 3,700 call and 3,000 put have maximum open interest. So that's the range for today. And we have Nalco, which has entered F&O ban. So watch out for that stock.
Okay, Mangalam, thank you so much for that. But on that note, let's also look at TCS earnings. They kick-started the Q4 earnings season, this time subdued performance actually that came in from the company. The company's net profit and revenue came in below the street expectation, while the revenue in US dollar terms declined by 1%. And this was on a sequential basis. Rima is joining you with us to give us a fine print on this one. Rima.
So TCS, as you pointed out, it's a bit of a subdued quarter as the macro uncertainty lingers on. The company's constant currency revenue growth has declined by 0.8%. Dollar revenue is down 1%. So sequentially, revenues have declined for India's largest IT major. But revenues ex of the BSNL, according to analysts, has gone up by 0.6%. But where the street could be a little disappointed is the margin performance, because margins for the company have fallen by 30 basis points to 24.2%. And this is despite lower revenues on a sequential basis from the low margin BSNL deal, some productivity benefits. And the company's, when you can see the numbers, there has been an increase in the other expenses. So some tactical investments made by the company, which have hurt the company's margins. Margins on a year-on-year basis are down even more sharply because Q4 of last year, margins were at 26%. So deal wins are quite strong. So deal wins for the company have actually gone up 20% on a sequential basis to 12.2%. BFSI is strong. But there is pressure seen in the consumer vertical. The company in the press conference has indicated that while the clients are not panicking, you are seeing, and there is no major impact per se in terms of, decisions of deal ramp-ups or deal ramp-downs or cancellation. You are seeing delayed decision-making. So clients are in a bit of a wait-and-watch approach. And given the macro uncertainty, the company's also decided to pause on its wage hikes, which would have otherwise been effective 1st of April.
Well, thank you so much for that, Reema. But here is what the TCS management had to say on their FY26 growth and margin guidance when quizzed by CNBC TV 18. Let's listen in.
On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. While till February we were quite positive and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March and resulting in some project delays, some decision-making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time.
Now stay tuned in for the management interview at 8:45 a.m. today on the Q4 earnings and the way forward. Okay, on that note, we'll slip into a very short break, and after the break, we'll get you what's happening in the world of commodities, so stay tuned in.
Welcome back. You're watching Power Breakfast on CNBC TV 18. US President Donald Trump announced a 90-day pause on the imposition of new tariffs. However, the baseline tariff of 10% remains in place for all countries, including India. Prior to the announcement, Home Minister Amit Shah expressed confidence that the tariff situation would stabilize soon. Let's listen in.
देखिए, असर का आकलन करने के लिए बहुत जल्दबाजी होगी. सिर्फ अकेले भारत पर टैरिफ नहीं डाला गया है, ढेर सारे देशों पर डाला गया है. हमारे कितने ऑप्शन खुलेंगे. अमेरिका में भी हमसे ज्यादा हमारे स्पर्धक है, वो देशों पर टैरिफ डाला गया है. तो इसका असर क्या होगा? हो सकता है कि हमारा सामान ज्यादा भी जा सकता है. कई सारे देशों में हमारे सामान जाने की व्यवस्था भी होगी. बहुत कॉम्प्लेक्स मसला है. इसमें इतनी जल्दबाजी में इसका असर का आकलन किसी को नहीं करना चाहिए. मुझे लगता है कि देश की जनता ऐसे पैनिक में कभी आती नहीं है. ये थोड़ा मीडियाबाजी होती है तो असर तो होता है, असर नहीं होता है ऐसा नहीं है, मगर धीरे धीरे संभल जाएगा.
Okay, on that note, now it's time to go across to Manisha, who's waiting by to tell us what's happening in the world of commodities. Good morning, Manisha. Again, a lot of updates coming in from Trump, and this time a pause. So what's gold doing? What's happening to crude? Everything in the world of commodity.
Oh, well, absolutely. If you look at the gold prices, we are at an all-time highs yet again. $3,200 an ounce has been taken now. So absolutely, every day it's a $80 to $120 of a move that you are seeing in case of gold prices. Unprecedented, clearly. We are in uncharted territories when it comes to gold. And all the concerns, whether it has been about trades and tariffs and China, geopolitical tensions, all seems to be playing well in case of gold. Gold actually is on track for the best week since November 2024. Also supporting gold is the weak U.S. dollar index, the tariffs, and the safe haven buying as U.S.-China trade tensions escalate. Crude oil prices, while are headed for a 4% weekly decline, prices still trading near 4-year lows. The markets have seen the U.S. crude oil exports to China decline and the U.S. crude inventories rise. That is what is weighing onto the prices right now. A quick word on copper, and we saw 4% of gains on Thursday as markets cheered the U.S. pause on reciprocal tariffs for 90 days for the world, excluding China there. Copper, while still is 20% off from its record highs, but expectations that China will now come out and unveil an aggressive stimulus measure is what is supporting the copper prices right now in Asia.
Well, thank you so much for that, Manisha. But, that's all we have on Power Breakfast this morning. Don't go anywhere because Bazaar Morning Call comes up next.